Welcome to The Explainer. Today, we're diving into the incredibly dense 2025 International Public Sector Accounting Pronouncements Manual to reveal what is actually a fascinating blueprint for global government transparency. If you've ever wondered how on earth governments are supposed to track, manage, and accurately report on the trillions of dollars they collect and spend, well, you're in the right place. We're going to decode the exact rules that keep the public sector accountable to you.
We'll navigate this framework in 5 quick parts. First, the public sector difference. Second, we'll enter the IPSASB. Third, the conceptual framework. Fourth, who actually uses this data. And finally, the traits of quality data.
All right, Section 1, the public sector difference.
Here is a provocative question to chew on. How exactly do you measure success without profit? Honestly, this question sits right at the heart of public sector accounting. If a private company has a bad year, profits dropped, the stock tanks, and the story is right there in the numbers. But a government? They aren't trying to make a profit. In fact, if a government is hoarding a massive surplus of cash while roads crumble and schools fail, that is definitely not a success story. It's a massive failure of service delivery.
The contrast is pretty stark. Private sector businesses are fundamentally driven by profit. They exist to generate a return on equity for their investors. Period. But the public sector is purely service-driven. Governments exist primarily to deliver essential services to citizens and redistribute wealth. You really can't evaluate a government's performance just by looking at its financial position. You have to look at whether it actually provided services to its constituents efficiently.
Which brings us to the concept of a non-exchange transaction. In the private sector, you hand over $5 and you get a $5 cup of coffee. Simple exchange. But the public sector operates mostly on non-exchange transactions. You pay your taxes, right? But the amount you pay isn't directly tied to the exact dollar value of the services you personally consume. You don't get a product handed directly back to you. This fundamentally changes how financial information has to be measured and presented to show what a government is actually doing with its resources.
Let's move to Section 2. Enter the IPSAB. So, who actually makes the rules for this unique environment? Well, first you have the ISAC, the International Federation of Accountants. This is a massive organization representing over 3 million accountants globally. Their core mission is to serve the public interest, and a huge part of that is supporting the independent standard-setting board that creates the rules for public sector entities. That independent board is the IPSASB, the International Public Sector Accounting Standards Board. And their 2025 Handbook is the ultimate guide we're unpacking today. They basically issue these standards to handle financial reporting under both cash and accrual basis of accounting. They adapt general accounting rules to fit the very unique, highly complex realities of the public sector.
Ultimately, the whole point of these standards is to empower citizens. By encouraging the adoption of these unified international standards, the IPSASB is trying to make government finances globally transparent and comparable. It means an analyst, a journalist, or just you can look at a government's financial statements and know you're evaluating high-quality information that holds up on the world stage.
On to Section 3, the conceptual framework. Before you can write a highly specific rule on how to account for, say, a military base or a new tax law, you need a rock-solid foundation. That's the conceptual framework. It's the underlying logic system. Think of it as the architectural blueprint used to develop the specific standards for what are known as general-purpose financial reports.
Now, General Purpose Financial Reports, or GPFRs, are absolutely vital. Why? Because they're designed for you. Certain bodies, like a specialized legislative committee, have the legal authority to demand custom-built, tailored financial reports from the government. But everyday citizens and taxpayers don't have that power. You can't just knock on the Treasury's door and demand an audit. GPFRs are the great equalizer. They're intended specifically to meet the needs of users who cannot demand tailored reports.
And these reports have to account for some wild variables that are totally unique to governments. First, the approved budget is literal law, so reporting against it is how we know if a government followed legal mandates. Second, governments live a long time, often centuries, so reporting has to look at long-term sustainability, not just next quarter's returns. Third, governments hold assets like national parks or military equipment. They don't hold these to generate cash, they hold them for their service potential. Standard accounting breaks down with a historic building you can't ever sell. The IPSAS framework explicitly handles all these unique traits.
Section 4. Who uses this data?
If the primary goal isn't profit analysis for Wall Street shareholders, who's actually sitting down and reading these GPFRs? Whose needs are the accountants prioritizing when they build these massive documents?
The framework is super clear about this, and it identifies a very specific list of primary users. It's the service recipients, so the citizens who rely on public services. It's the resource providers, the taxpayers who fund the government, plus lenders and donors. And finally, it's the representatives of those people, like the legislature and parliament. Everything in the IPSS framework is engineered to serve those specific groups.
And what are these users doing with the data? They rely on it for two distinct but totally overlapping purposes: accountability and decision-making. Accountability looks backward. Did the government manage our resources efficiently? Did they comply with the budget? Decision-making looks forward. Based on this financial reality, should I vote for this representative? Should we fund this new infrastructure program next year? The data has to perfectly serve both of these crucial functions.
Finally, Section 5, Traits of Quality Data.
To make sure the financial data actually serves the public interest, the IPSASB demands 6 key qualitative characteristics. The information must be relevant, meaning it actually impacts your assessment. It requires faithful representation. It has to be understandable to a diligent user, not just a mathematician. It needs to be timely, because late data is pretty useless. It must be comparable globally, and it must be verifiable by independent observers. Hit those 6 marks, and you have an incredibly powerful tool for democracy.
The absolute gold standard among those traits is faithful representation. To faithfully represent an economic phenomenon, the data must be complete, it must be entirely neutral, and it must be free from material error. It means the reporting isn't spun to make a politician look good. It's totally neutral, showcasing the actual economic substance of a transaction, completely free from intentional bias.
Achieving this neutrality demands immense prudence from accountants. The manual literally states that the exercise of prudence means assets and revenue are not overstated and liabilities and expenses are not understated. You simply cannot paint a rosy picture by hiding future debts or exaggerating current cash flows. Extreme caution has to be exercised under conditions of uncertainty so the public isn't misled.
Of course, the framework acknowledges real-world constraints. You can't track every single paperclip in a federal government. The cost would be astronomical. So the rules are constrained by materiality, meaning would omitting this information actually change someone's decision? And cost-benefit. Does the cost of gathering this specific data outweigh the actual benefit it provides to the public? It's a constant balancing act between gathering perfect data and delivering practical, useful reports.
Ultimately, understanding this conceptual framework proves that public sector accounting is far more than just dry math or balancing ledgers. It's literally the ultimate mechanism for holding power accountable. It forces governments to translate their promises and policies into hard, verifiable reality, ensuring long-term sustainability for future generations of taxpayers.
As we wrap up this explainer, I'll leave you with this thought. The next time you hear a politician quoting budget numbers, or the next time you look at your own community spending, ask yourself, does this reporting truly give you the complete, neutral, and verifiable picture you deserve? Does it meet the gold standard of faithful representation? Keep asking those tough questions, and I'll see you in the next explainer.